Into this very important conversation. Now, the Nigerian capital market has recorded a major boost in its contribution to the nation's gross domestic product, rising from 13% to 33%, following a 68.93 trillion surge in market capitalization since April 2024. The market capitalization has more than doubled within the period, attributed to a combination of policy reforms, improved regulatory oversight, and growing interest from both domestic and foreign investors, which sustained liquidity, remaining critical to maintaining the market's momentum. The SEC remains committed, says it will continue to work closely with market operators and stakeholders to build a more transparent, resilient, and investor-friendly capital market capable of supporting Nigeria's economic ambitions. Joining us via Zoom from Ibadan for this conversation is public finance and policy expert Olusegun Elemo. Good morning, sir. How are you doing?
Very fine.
All the way in Ibadan. Nice to have you on the show this morning. Thanks for joining us.
Thank you.
So we go straight into this very important conversation. Now, oftentimes we've spoken about great policies like this. It's beautiful. We speak about our GDP and we're very much excited. But then again, we wonder, what about sustainability? And not just sustainability, how will we trickle this down to the layman that will feel it? The people on the streets, oftentimes, they do not understand this English. They watch it and feel like, oh, those people are just speaking English, because they feel like their pockets are still very much dry. So when we speak about these policies, at what point, I know the president had mentioned some time ago that, you know, the layman on the streets needs to start feeling these reforms for them to believe it. At what points do we get to that? And also, how are we able to sustain amazing growth like this?
Yeah, thank you very much for the question. I'm particularly happy that, you know, the SEC is now talking about, you know, retail investments. And that ties very well with the point that you raised about how, you know, ordinary Nigerians, you know, feel the impact or the pulse of economic growth. The issue currently, while we're having, you know, headline growth in the capital market, we're also facing challenges, you know, with liquidity issues. And that liquidity issue is also a subset of the fact that many Nigerians largely, you know, are not able to, you know, do not have disposable income. Hence the reason why the SEC is now, you know, talking about retail investment. You cannot, you know, build the market alone on foreign investors. You also have to look at how much confidence, you know, domestic participation, it's about, you know, with the market. And I've said it and continue to say that the private sector has huge responsibility in ensuring that the ordinary Nigerians feel the pulse of economic growth and are able to also participate in the dividends. And we're now seeing, you know, this also playing out in a largely driven private sector operation. For instance, you see how price of commodities have increased exponentially in the last, for instance, immediately subsidy on petroleum products, harmonization of the foreign exchange happened. You saw that impact on commodity prices. Now you've also seen how, you know, the economy is also, you know, buffering up and, you know, adjusting. But you see that many private sector operators haven't, you know, reflected that adjustment in the prices of their commodities. And that impact on disposable income for the ordinary Nigerian. And if you don't have income that is disposable, you cannot be talking about retail investment, no matter how small. And you need those retail investments to also show, you know, domestic confidence. And I think that's why, you know, the SEC now is setting up you know, this, you know, its committee to begin to look at this issue and also, you know, broaden its participation with other stakeholders to see how it can leverage, for instance, technology and partnership with, you know, fintech operators to see how more Nigerians can participate. Also, is that the Dangote refinery is going to go into the market very soon. You expect the ordinary Nigerian to be able to participate, not just, you know, an elitist, you know, market. And that's how wealth will be created. That's how we're going to be able to reduce poverty, in the country. But if Nigerians don't have the resources to be able to participate in economic operations as this, then you wonder what advantage they are able to take of economic growth. And I think that ties very well with the question that you raised.
Permit me, sir. I think you have painted a picture of a schism, economic schism in the structural, in the stock market, in the capital market. Currently, you're talking about foreign investors, moving into the sector. We've made a lot of gains through that, but at the same time, you're talking about the lack of capacity, in terms of liquidity of domestic businesses, manufacturers, to actually play a major role in the stock market, if I get you correctly. Now, in terms of the foreign investors, would that not be a product, the success in that area of the government policies, knowing that when this administration came in, there was no dollar anywhere in the country? We all know that. We know how bad even our forex reserve was at a point about $5 to $7 billion, even when on paper we're recording $33 billion handed over. So we knew what happened to all that. But now, with the steps taken by the CBN, the monetary policies of the CBN, which has actually encouraged foreign direct investment. For instance, if you look at foreign investors in our economy today, particularly those who are buying the treasury bonds and all that, and they move into the bank to buy the bank stocks, you realize that we have one of the best performing stock market, which is about 20% profit margin, interest on their investment. So because of that, we have a lot of capital moving in from foreign investors into our own country, into our own stock market. So that majorly contributed, to the success of what we have seen. So my point is that on the success of the foreign investment into the country, that cannot be divorced from government policies, particularly the CBN monetary policies under the Tinubu's administration. The other aspect in relation to local investment, you've actually made a very important point in terms of Dangote coming into that sector. But we should also not forget the pension fund administrators' role. They have actually pumped a lot of money into it in a way that there is an increased liquidity. Yes, not enough. I would agree, not enough. We've seen the efforts also of the CBN in terms of bank recapitalization, which is also bringing in new resources. I know it is not enough. What do you think, what other steps can be taken to deepen the local aspect, the local content, in terms of contribution to the capital market growth?
Well, yeah, I completely agree with some of the points that you have raised. We cannot talk about some of these gains without, giving credit to the policies of government, whether, fiscal or monetary policies. Fine. But also you have raised very, tangential issues. For instance, the PFAs that you mentioned, they put money in the market, but how much of that is going to the ordinary Nigerian in terms of dividends? Many Nigerians do not even have confidence again in the PFAs. I mean, we've seen. I know a few Nigerians who have issues, for instance, with their pension contribution, and as soon as they stop working, they find it very difficult. And even when they have their contributions in the PFAs, it likely doesn't yield encouraging interest. So you have those monies sitting there, idling there, but only a few or institutions are gaining from it. And that's what we're saying. Don't use this. You can create growth, economic growth, and you're still creating the economic gap. And that's what you don't want to happen. You want a growth that is inclusive, that both foreigners and domestic operators are able to participate freely and take advantage of the growth. And I think that's the whole essence. And also that borders on this issue of liquidity crisis that we are now facing in the market, that you can have this headline growth, a sizable market, fast growing, but You're also having structural challenges in a way that people cannot liquidate their asset so easily because the liquid is not readily available in the market. So you want a situation where trading is easily done, where there are no distortions, where there are no price distortions, and assets are easily convertible. I think that's some of the points that the SEC is now raising. That let's not just focus on the headline growth. Yes, that's fantastic, but we want an inclusive market, a market that yields to those who have big resources, but also the retail investors that can make some liquid off the market and also increase their
Mr. Elemo, how do you think the SEC can address two major issues arising from your contribution now? That the first one is the aspect of the cost for institutional investors, which is a bit high, because we need to bring that down in order to encourage more institutional investors within the country to achieve what you have told us. The second aspect is the issue of over-concentration of stock investment, over-capitalization of certain sectors, such like the banks and the telecos, rather than manufacturing businesses.
Well, so again, is that some of those issues border on policies. If you don't create an enabling environment for manufacturing industries to thrive, such that they attract investments and retail investment or institutional investment, then we are going to have the kind of crisis that they are currently faced with. What we're currently witnessing in the market now, situations where only the banks are largely traded and telecom operators, it's because they are doing fine, and perhaps maybe the regulatory environment is also very favorable to them. And I think the government, the fiscal authorities, will also have to look in that direction and possibly providing some interventions, to the manufacturing sector. And that will also, not just fiscal interventions, but also the operational environment, in a way that enables them to operate at a margin that is profitable and that attracts investment, whether foreign or domestic. Also, is that the complexities around the market, of things that the SEC is also raising now, to see how it's the committee, the working group that it has set up to help distill some of those issues. There are a lot of complexities around the market. Sometimes, how many ordinary Nigerians even know how to get around the market? For instance, who do you talk to? How do you convert your asset? If you have, no matter how small your stock assets are, how do you easily convert them? And sometimes those who have relatively small stock assets, find it difficult to convert them than even people who have huge and large stock assets.
And Mr. Elemo, let's explore that a little bit further. Because all of this we're discussing borders on macroeconomics. And it sounds pretty good, the data, the analysis, and all of these points, you're reeling out for us as an economic expert yourself. It looks pretty good. But then you mentioned, 2 points. The market is complex, the complexities in the market. And then you also talked about that you can't build your GDP only on foreign direct investment. Let's talk a little bit further on microeconomic matters. How then can we dissolve the complexities in the market to allow, indigenous firms, small, businesses to find their way up the ladder as well, so that it will trickle down up to that point you raised, that you can't build your GDP on direct foreign investment alone. We can also balance that with what comes from locally and internationally as well. How do we bridge that gap?
It's largely on the income level that you have domestic. If you don't have liquidity domestically, there's no how you're going to be able to achieve the point that you raised. Much of the investment, much of the capital flows that we've seen recently are largely foreign. And that's why you now see that majority of those who are taking advantage of the current economic growth that we're experiencing are not domestic operators. And you want to redirect that. How do you redirect that? Provide an enabling environment for businesses to thrive, so that they operate at a profit, and they have freed resources to be able to engage in the market. And then you have this issue of retail investments. So SEC, for instance, is saying that it wants to onboard 20 million new investors. How do you do that in a country that is largely leading with poor people? So you want a situation where disposable income is also available to every average Nigerian. How do you achieve that? It's by the private sector lowering price of commodity in a way that people don't expect the entire resources as they earn salaries or wages or whatever, and expend it on things that had to do with their living conditions, whether in housing or healthcare or education of their kids and all of that. They have some resources left to be able to invest, and that's how you're going to be able to encourage retail investment. So again, this has to do with both the fiscal authorities providing an enabling environment for businesses, but also the private sector actually reflecting the current state of the economy in commodity prices. I will tell you, the truth is, there's no doubt about the fact that the economy is buffering up and is adjusting. Yeah. We need the private sector to also reflect that in commodity prices. You need other operators in the economy to reflect that, whether transport operators or all of that. And that whole exercise, will level up and then, culminate into a situation where the average Nigerian is able to free up some of his resources for retail investment in the private, in the capital market. Right,
Mr. Elemo, some critics actually, definitely, some agree, others, see it, differently. That's talking about the issue of concentration, because the Nigerian stock market is actually dominated by, I don't want to use the word sharks, but you refer to, this private sector that you mentioned, all these large companies and in sectors like banking and telecommunication, which could probably be reflecting the broad-based economic participation. But here is the catch. Let's talk about volatility, because Nigeria, as we know, has experienced boom and bust cycles in the past, particularly remember the 2028 market crash. What safeguards do you think are there for us to not, or do you think exist today to prevent this similar scenario of market sentiment suddenly making a shift?
Well, I think the regulators will have to do their job more effectively, and the regulator, now being the Security and Exchange Commission, will have to do its job more effectively in a way to avoid some of these issues that you've raised. But also, I think the transparency in the market is very, very key to addressing some of these issues. If people know how to get by, and the market is not held down by just a few. I'm being careful with the kind of words I want to use, but what I'm saying is that you want to broaden the operations of the market in a way that everybody who wants to participate is able to participate, and there are no price swings. People can convert their assets so easily. There are no concentration on a few stocks. All stocks are given the level playing field, but also that is dependent on fiscal policies, providing the enabling environment for some of these industries, operating in these sectors to be able to operate freely. If they operate, at a level that is above the waters, then their stocks will be attractive for people to want to buy and trade. I think also the issue we're having here is also the retail investment, which also the daily trading that we used to see in the past. Not just a few people holding down stocks and bailing out and milking the market in a way that enriches a few. But you want a market, like I said, that it's growing, but it's not creating economic gap. It's not creating economic inequality. It's also able to take along with its growth, majority of its domestic people and not just international
Exactly.
just taking
Mr.
advantage
Elemo,
of
but
the
not to cut you short, let me just chip in. You know, my colleague mentioned something very important. We cannot overemphasize that our economy is very volatile. And that's why in the beginning, I asked you a question that we speak about these very fantastic ideas, but how do we now sustain it? I feel like sustainability has been a problem for us. So for you as a person, what do you think is that one thing, you know, we need to do? When we talk about great GDP like this, what is that one thing we need to do to make sure that we keep it at that particular spot? Because oftentimes we've seen the economy go really good and then we've seen it come down again. How are we able to sustain it at just one spot? And I don't think you really answered my first question. I asked, how do we now let this trickle down to the people on the road, the people that do not understand this English that we're speaking?
Well, on that second question, I already answered it. The way to trickle it down is by these same private sector players. Like I mentioned, they all increased commodity prices when the economy started swinging left. Now the economy is buffering up. You need them to adjust commodity prices.
So then how do we regulate that? And that's a big problem. How do we now regulate that? Since we've identified the problem, how is it being regulated?
Well, in a free market, you cannot, there's a limit to how you can intervene in a free market. You can't control price. The president was, mulling the idea of, commodity exchange and whether we can use that to sort of moderate commodity prices in a way that at least, allow the operators to operate at not a level that is exploitative. You will have to find a middle ground in all of that, because we're also operating a free market economy, and in a free market economy, the private sector is at large determines commodity prices. But in doing that, they also have to be very considerate and ensure that commodity prices reflect truly the state of the economy. Now, if you jacked up prices as a result of policy decisions, and those policies are now moderating, and you can see it evidently for instance, in how much profits are being declared by private sector businesses and operators, then you will expect that some of the dividends that are coming from the profits that you are declaring is able to mitigate the high cost of commodity, the high prices of commodities. And that's how the average Nigerian is going to be able to feel it. And I'll give you, for instance, a typical example is that if you bought a loaf of bread, for instance, after May 2023, for instance, let's put at 100 naira because of fuel subsidy removal and harmonization of FX. Now, you now have a situation where, for instance, the CBN is even now mopping up FX because it wants the naira to stay at a particular level. It doesn't want the naira to go stronger than it is right now. I mean, we're trading naira at 1,800 before now. Now it's about 1,300. It gives an indication that the naira is going stronger and stronger. Now the CBN is mopping up FX from the system because it doesn't want naira to go stronger than it is right now, and that has implication for the economy. Now, if, for instance, there are businesses who have increased, for instance, loaf of bread at that time, and now you now have naira strengthening, and your raw materials, the cost of your inputs are also dropping, you expect that you also drop the price of the final product. But how many private sector operators have done that? So those are the issues. We all need to be responsible as the fiscal authorities and monetary policy authorities have to be responsible. Also, the private sector players must be responsible in a way that helps the average Nigerian to feel the pulse of economic growth.
Exactly. Exactly. Thank you so much, Mr. Elemo. Thank you so much for those very great insights. It was good to have you on the show this morning, all the way from Ibadan. You joined us. Thank you very much.
Thank you for being here.
Thank you for having me.
All right. Thank you. All right, cyber threats are rising and Nigerians are increasingly at risk online, from data breaches to financial scams. How safe are citizens in the digital age? Join us after the break for this very important conversation.